Hi everyone, I'm Dan, and welcome to episode 8. Today I'm going to be reviewing Imagine AR, over-the-counter ticker IPNFF. And I don't want to give too much away, but this is probably the biggest pile of shit I will ever review in my whole life. If you enjoy the video, please subscribe and share with your friends. Appreciate all your help so far in growing the channel. So let's get straight into the 7-point review process, and remember, if you want to skip to a certain section, I'll put the segment in the comments area. If you genuinely are considering investing in this company, I urge you to please watch the whole video. So let's get straight into it then. What do they do? Here we are on the Imagine AR website. Let's understand a little bit more about them and what they do. Well, in short, they don't really do a lot, but let's have a look at what they're meant to do. Imagine AR started once upon a time as GeoNovius Resources, and then had a foray into cannabis under GeoNovius Cannabis, and then transformed into GeoNovius Media, which then transformed into Imagination Park, and now, hopefully, I think they finally settled on their business strategy and final branding as Imagine AR. And we can see here on their website that it says ImagineAR.com is an AR as service platform for desktops that enables businesses of any size to create and implement their own AR campaigns with no programming or technology experience. So you can see here, scrolling across the top, they've worked with some pretty impressive names in the past. Valencia, Real Sociedad Football Club, Sacramento Kings, NFL alumni, just to name a few. So you can see why they would be interested in investing in this company. But you'll have to do your own research into these contracts to understand exactly what kind of revenue they generated, or whether they were just something as simple as like a $10,000 order as a one-off. If you go to the media section on their website, it becomes pretty clear to see that these guys love, and I mean love, a press release. There's one every few days of amazing things that's happening. And the most recent one that's caught the eye of a lot of investors is this top one here, the Oasis Digital Solutions Partnership. So it appears as though Imagine AR are going to be getting into the NFT, or the non-fungible token marketplace. Now recently you may have seen a lot of attention in this space, so hype around tickers such as TCAT, OCG and WK. Look, it's clear to me that AR is going to play a big part in the future of marketing. For example, you might get special customer offers for downloading an app and using your phone to scan and see against the shop what offers that are available if you go inside. And that's pretty cool, right? So you get special offers, the company gets your details, so it helps them to market, but it helps you to get something back as well. And whilst that's a really cool concept, I'm not convinced that Imagine AR is the company that's ever going to fill that space. And simply because I think they'd already be doing a lot better than they currently are financially if they had any kind of run on the revenue available in this space. Another thing to note is that on Friday trading was halted at a request of the business. So another press release was issued. More amazing news coming out of this amazing company. Wow, let's get invested in it. Well, no. Take a step back for a second. The press release that came out appeared to state that Imagine AR would be working with First Tube Media and ultimately Grubhub, which in ordinary circumstances you could understand why it would generate a lot of hype around a particular stock. But this is really important to note now and save for later when it comes to our decision making process. So rather than speculating on press releases, let's have a look at the financials, because that will give us a lot more information about the company and how it's been run and what hope there is for the future and what might happen in the future as well. Here we are looking at the financial results ended August 31st, 2020, and you can see from 2019 they were turnover 134,000, not 134 million, 134,000, and 2020 it went down to $54,000. Now this company has a market cap of nearly 90 million Canadian dollars, giving it a ratio of revenue to market cap of 1,666. Now you might argue it's declined and it could have been going up, but the most they've ever recorded in terms of revenue was 2018 when they had 500k. So it's still an astronomical market cap for anything they've ever achieved in the past, and to be honest, on the face of it, anything they're ever going to achieve in the future. Now you could argue that COVID had a negative impact on the company, but actually I would have thought it would be the other way around and more companies investing in augmented reality concepts. So if anything, COVID should have provided an opportunity rather than a hindrance. If we look at cash, in 2019 they had 114,000, but by 2020 they had 4.2 million, which you could say is brilliant, but it's not, because what they did was they diluted their shareholders to achieve this extra income of cash. And I think another key thing to point out here is wages and salaries. So in 2019 they had 708,000 expenditure on wages and salaries, but by 2020 only 83,000. Now, just doing some quick maths on that 83,000, it sounds like they've only probably got about 3 employees max. And even from a sustainability perspective, their revenue doesn't even cover their wages. So I'm not sure how this business is viable on a long-term basis without further major shareholder dilution. Now, if we look at the net loss for 2020, it's at 9.3 million, a significant rise from 2019 at 2.3 million. However, there was a write-down of intangible assets, which, to be fair, a lot of companies do during weak financial years. Also, for those of you that have been subscribed to the channel for a while now, you will notice I always go through whether there is a going concern status, and there is. It's all over these accounts. There are major issues with the long-term viability of the current operating model of this business. I'm just going to take you over now to Simply Wall Street just to show you visually how much cash they're burning through. We can see here that the company's peak annual revenue is in the 2018-2019 financial year, where they amassed revenues of up to 500,000 Canadian dollars. But the line I really want to draw your eye to here is this pink line, which you can see the free cash flow, and essentially they're currently burning at the moment around 2.6 million Canadian dollars per annum. And if you consider for a second that the financial accounts were submitted for August 2020 and we're now in March 2021, they're going to have nearly burned through all that cash that they had in their account. And it makes me think that in the near future there'll be a further dilution coming for shareholders. Another element that I want to pick out of the financials is the CEO compensation. So in 2018, he was taking home around 257,000 Canadian dollars. However, although the revenues have declined, by 2020, his earnings have gone up to $332,000. Now, he's taking home more than the company is making in revenue, and that does not sit right with me, and it shouldn't sit right with you as investors either. So you can see here as well, Alan's total compensation of 372k is above the average for similar companies of this size in the Canadian market. So that average should be for him taking home 151k. He is taking home 3 times as much as the average. And as we just said, his compensation is increasing whilst the company is unprofitable. It's pretty clear to me that the financials are absolutely shocking. However, it doesn't begin to even paint the story that the share structure does. And if you're going to stick around for just one segment, start to finish, please make sure it's this one. So as always, I like to look at the insider sells versus buys. And ideally, you want to see 100% in the buy section. However, here, there are some sells. So you can see around 3.9 million Canadian dollars was sold 6 to 9 months ago. And there has been some rebuys since. So scrolling down and looking at the recent insider transactions, it starts to paint a bit of a story. So if we look here at recent insider transactions, there's one name that really stands out and one individual that's sold a hell of a lot of shares, and that's Sheldon in Wentash. So in July 2020, he was selling shares hand over fist, couldn't get rid of them quick enough. However, when we scroll up to the top, we can see that 3D Capital have been buying shares back at a much cheaper rate than were sold down here. So let's look a little bit further into 3D Capital. But before we do that, just want to scroll down a little bit more and have a look at the top shareholders. So 1313366 Ontario Incorporated, 3D Capital Incorporated, and Lynn Factor. And it will soon become clearer why I pointed out these 3 investors. And a quick Google search of 3D Capital reveals that Sheldon in Wentash, who sold all his expensive shares in July 2020 and rebought them via 3D Capital, owns 3D Capital. Now personally, I don't like to see that an insider has sold shares 8 months earlier and then rebought them at half the price and then buys them just a few days before positive PR comes out at half the price of what he sold them for. I think it looks incredibly dodgy, and I don't think that this kind of behaviour goes in the interests of retail investors like you and I. So now I'm a little bit suspicious of Sheldon, so let's have a look at what he's done in the past and how he behaved. So now Sheldon's piqued my interest because of some of his behaviours. I decided to research him a little bit more, and in 2006 Sheldon was involved in Pine Tree Capital, which was under investigation by the OSC. So you might ask, what was Sheldon under investigation for whilst he was at Pine Tree Capital? And just a little bit of manipulative trading in securities and also insider trading. Starting to get the theme yet? Good. So obviously Sheldon's an interesting character, but I thought let's have a little Google of Lynn Factor and see what's going on there. So, oh, look, Lynn's Sheldon's partner. So let's just click on that. Oh, for the love of it, for the love of scamming retail investors. These two are in it together. However, this isn't where the story ends. Now, this is the most exciting part of any video that I've ever done. You get to bet, I'm going to give you 5 seconds, who's involved in 1313366 Ontario Incorporated. 5, 4, 3, 2, 1. Well, if your answer is Lynn and Sheldon's son, you just won yourself 100 virtual YouTube points, which has the cash value of exactly the same as an Imagine AR stock in 9 months' time. 0. I mean, I'll let you read through all this in your own time, but this is so dodgy, it is unbelievable. I can't believe that the Canadian authorities are actually letting them operate like this. I mean, it doesn't even end there as well. I'm going to go back over to the company filings now and just have a look at their warrants and exactly what can happen there, so you're aware of the risks that you're entering into when investing in this company. So they have previously diluted the stock, and you can see here from the warrants perspective that there's quite a lot of warrants to go at with expiry dates that range out to 2023, so I'd expect to see further dilution on the back of this. But again, I'll put all this information into the comments section and you can read through it at your own time, make up your own mind. And if you're able to answer these questions and make yourself happy with investing in this business, then fine, leave me a note in the comments section. And I'm always willing to consider other angles for why this could actually be a good investment. But to be honest, I'm just not seeing it. It looks like a complete scam to me, with people taking money from retail investors and lining their own pockets. And the final point I want to touch on in the shareholder transactions is just when they bought them. So this really stinks as well to me. They did most of their buying kind of pre-Feb 13th. So fair enough. In isolation, it may or may not be a good thing. But then, if we look at when all the news releases came out, we can see here that the biggest news release was the partnership with Global Sports Initiatives, which was released on the 16th of Feb. And the thing that leaves a really sour taste, and the thing that, to be honest, I really don't like and actually quite despise, is that he's selling off a massive amount of shares to make the share price crash in June 2020, then rebuying at half the price ahead of press releases that he knows is going to push the price up. And I'm not the first person that's spotted this. There's quite a few reports online as well about how this company has behaved like this in the past. I mean, Sheldon was even investigated for manipulation and insider trading activities. Now, that's pretty alarming in itself. Everything I mentioned so far has been pretty damning. And to be honest, it really should be, because the financials are terrible and the shareholder behaviours, well, they raise more questions than they give answers. However, in order to try and be fair, let's look at the bull case. And what are the good things about the company? Now, in the short term, I think that you'll probably be able to make money out of this stock, just because there's so much hype around it right now. And also AR and non-fungible tokens seems pretty cool, nice little mix. You can see why it's an easy sell to investors that are eager to get on the next big thing. They've also announced some pretty big deals recently, so a project with Grubhub, which is a major name, and again, in the short term, I think this will have a positive impact on the share price. However, they've done this in the past, so I don't want to get into it now because this is meant to be the positives, but they do have history of behaving in this way. Now, I guess the thing to note is if the share price does go up in the near future, just be careful, because I can see Sheldon dumping a lot of shares in one single go to get out of this stock. Now, they do have a great list of client names there, and again, to be fair, if they could nail one of them, they could make a lot of money. However, they have had consistently low revenues, which makes me think there really isn't that much hope for the future on this business. And even if there is long-term viability in this project, then the market cap is so over the top right now, it would need to come down. So in terms of the bear case, I think here there's so many red flags, and it's not even little issues that stand out. So I mentioned it a few times, but the financials are dreadful. The cash burn is incredible for what they're turning over. They've had dilution previously, and pretty sure they're going to do it again, and probably very, very soon as well. The trading halt could be because they're going to announce a dilution. The fact that they have free cash flow of minus 2 million per year as well. A company needs to be sustaining itself for long-term viability and prosperity. They're just not doing it, and to be honest, they're nowhere near doing it either. So for me, it's a no. And the second thing that I want you to consider in part of the bear case is just the shareholder behaviours. I mean, they're terrible, bordering on suspect, potentially even illegal. I'd like to also throw in that there's been a full-day trading halt, which isn't typical. You normally only get an hour or two maximum. And when you consider all the points that are pulled up, I think that there's probably going to be some bad news on Monday coming out as well as some good news that the company's made up. Also, there's a lot of competition in this space, and I know it's attractive and quite an easy sell as like this is the next thing in the future. However, the companies that they're competing with, they have major R&D budgets, and to be honest, I'm not really sure what Imagine AR's unique selling point is that makes them stand out above everyone else. And if we look at the revenue that they're generating, it says to me that there really isn't a unique selling point because they're not actually selling anything. So personally, when you see a market cap of 90 million plus and revenues at 50k, something's really wrong with this company and it's getting pumped up and it doesn't have the results to underpin the fundamentals that you often need to sustain a share price. Also, the fact that they only have wages of under 100k, which makes me think they don't have many employees. And if we go over to look at LinkedIn, you can see they've only got 6 employees. Now, I know not everyone has a LinkedIn account and not all employees would be on here, but you'd like to think at least kind of 40% of the employees would be on here. And their wages are under 100k, so it makes me think there's not that many employees. Now, you can see here that there's only 6 people that claim to work at the company. So I'm not sure how they provide the service that they intend to provide with just this smaller number of people. And the final point for the bear case is that quite simply, they've operated like this in the past, where they've done press releases and used social media to pump up their share price. And essentially what we can see here is that they announced the potential deal with TikTok and Imagine AR, which I'm guessing based on the revenues never actually materialised. So if you're going to read any of the links that I post into the comment section, I'd read this one. So it just talks about pumping hard and Imagine AR, back to their old tricks. They've done this previously. And this writer probably does a better job than I ever could of explaining exactly some of the failings that they've had in the past. And look, before you try and accuse me that I'm just trying to put the stock down, I'm probably trying to short it. Well, I don't even know how to short things over the counter from the UK. I don't even think it's even possible. If I could, then I would be, but I'm not. And therefore that leads me to think in terms of a wrap up, maybe a scam's the wrong word, but they're certainly using this business model to skim money from retail investors and line their own pockets. I'm afraid to say they have a history of doing it, and it appears as though history is now repeating itself again. So if you are going to invest after watching this video, please just make sure that you're aware and you accept some of the risks that you're getting into operating with this company. And also make sure that you're looking for the signals that could say the share price is about to drop down significantly. So from a technical analysis perspective, I don't really believe that it's worth doing any. The share price goes up on the back of PR, and then guess what? When it comes down, it's going to be Sheldon, 3D, 1313366 Ontario, and Linfactor selling all their shares and leaving you bag holding. However, that said, let's just take a quick look at the chart and see what could happen if the company is telling the truth and if the company is moving forwards and they are generating more revenues and, ultimately profit. So here we are on Trading 212, and the first thing I'd kind of draw your attention to is that we've got one kind of support and resistance line here and then another here. In terms of the MACD, it's starting to trend downwards, so it suggests there's going to be some pullback, but depends on PR, I guess, because they, love putting PR out. Awesome Oscillator suggests it's going to trend down as well, but again, PR. It's above the EMA 200 and above the EMA 50 line. Actually, on the 30-minute chart, bounced off the EMA 30 line here. So I guess that's positive from a chart perspective. It suggests there is support there. This first line, so it kind of peaked above it, or first of all, it hit the line and dropped back down, but then very quickly went through it. So resistance turned to support and then projected its way from 30 cents here up to 39 cents, but then had 2 kind of tests up here around 39, dropped back down, and around this level here there was some support. So previously where there'd been resistance has now turned to support, and then it kind of excelled through the 39 cent area here. So where there'd been prior resistance, it then turned to support and it's gone up and it's kind of trended around this line, and is just slightly above at the 42 cents line now. So the chart suggests it is going to go up, and like I said earlier in the video, I do think you can make money on this from kind of a short-term perspective, but understand the people, understand how they operate, and make sure that if you see things going down, then you get out of this one quickly, because you'll be left holding the bags. This brings me now to the what am I going to do stage of the 7-point review process, and we're going to hop over now to the Excel document where we can see the ratings for this stock. Now, just to mention, if you have just jumped to this section of the video, please go and watch the shareholder structure section, because I think it's the most interesting. However, let's get into this. So I've added them in here, and you can see that they're available on the OTC. They're also available on other exchanges as well. In terms of the financials, I've scored them a 1 out of 5, and 1 is the worst that you could possibly get. There's no notable revenues, there's a huge cash burn issue, there's dilution, and there's no major long-term projects in play at the moment. The company's highest ever turnover was $500,000, and the market cap, quite frankly, is ridiculous. So in terms of growth, I've scored them a 2 out of 5 because quite simply there hasn't been any growth. They've gone back the other way. And in a time where augmented reality could actually be booming for them due to the pandemic, I feel like they've missed the boat. And I'm sure AR will offer a brilliant mechanism for companies in the future, but I genuinely feel like the future of this company is either another name change, dilution, or potentially even insolvency. So in terms of attractiveness, well, it's pretty clear that the company is very good at a press release, if nothing else. There's a lot of morons as well pumping the stock that don't really understand it and don't understand the risks. I mean, they probably don't get the concept of a market cap to revenue ratio or to earnings ratio. So expect to see a lot of pumping on social media about how brilliant this stock is and it's the next kind of big thing and this is going to take off and this should be 10x, because to be honest, it's probably more likely to be minus 10x by the time Sheldon and his wife and his son have whipped all their money out of the business. In terms of risk, I've scored them a 5 out of 5. There's no real revenues to note, there's no employees to note, there's no long-term contracts, there's no unique selling point. Other companies that do this do it a million times better. They're a going concern, they've got cash burn above the latest cash position, and that was raised at the expense of shareholder dilution, so it has to be a 5. There's no other rating that you could possibly give this company right now. In terms of what am I going to do, well, I did previously buy it because I saw the hype in the media, and I do quite a bit of day trading, so I bought on the hype, but when I've looked into the company, absolutely terrible. Stay away from it. Run a million miles the other way if you can. And therefore I've rated them as a sell. Now, if I could short, I'd be putting short in there. And you may choose to hold and see what happens with their further press releases, but I've got to be totally honest with you, it feels like you're jumping on extremely thin ice with this one, and it could crack at any point. Just don't get left bag holding on this one. Anyway, that wraps it up for today, so thank you for watching. If you enjoyed the video, please hit that subscribe button. And for those of you that watched all the way through, I hope you found it interesting, and that ultimately my aim is to help protect your money. If I've made the wrong call on this, and it turns out to be a brilliant business, then I apologise in advance for the missed opportunity. But I have to trust my gut instinct and give you the facts as I see them. If you do choose to still invest after watching this video, please let me know in the comments section. I'm still interested to hear other sides of the argument. So thank you for watching. Again, please hit that subscribe button. Take care and happy investing for the week ahead.